December 2015. Academics and historians have been assessing the unprecedented changes that have transformed the global financial services market over the past 15 years. The global securities and investment banking groups that dominated the market in the last century are now extinct. In their place, we have an intelligent galaxy of new specialist advisory, investment management, algorithmic software and consulting firms networked with a universe of powerful transaction facilitation exchanges. Banks now exist only as giant regulated pools of capital. How did we get here? Looking back, we attempt to identify the events that have rendered global markets virtually unrecognizable from their 20th century predecessors. August 2004. Google goes public and carries on to become the world's most valuable company. Its rise and concurrent development of the semantic web fundamentally changes the nature of knowledge distribution, effectively dissolving the traditional historical advantages of large companies in knowledge-based industries such as media, technology, and finance. June 2005, Dresdner Kleinwort Wasserstein, the investment banking subsidiary of the Allianz Group, launches Revolution, a cross-asset class electronic trading and analytics platform, foreshadowing the move towards automation and lowest unit cost delivery of most capital markets products and services. Later in the year, the consolidation of liquidity pools with electronic exchange technologies is jump-started by the NYSE Archipelago merger. February 2006. JP Morgan's CEO heralds the acquisition of Morgan Stanley as an opportunity to reduce costs and respond aggressively to declining margins in many core markets. Catalyzed by this event, the summer sees many other copycat mergers. September 2006. Betfair prepares for an imminent IPO. During the marketing period, favorable comparisons are publicly made with global security exchanges such as the NYSE Arca. With this publicity and the growing knowledge of sports trading surrounding the IPO, Man Group launches a new breed of asset class, the first ever publicly available sports trading hedge fund. April to November 2007. Armed with its highly rated stock, Google, the world's leading information source, embarks on an aggressive drive to acquire companies owning valuable proprietary data across a range of industries including financial services. March 2008. After 2 years of negotiations, Arcanext, the world's largest equity exchange, is formed from the merger of NYSE Arca, Euronext, and the LSE. September 2008. Shockwaves are felt across the globe as eBay enters the financial services sector, buying the newly created Arcanext. eBay Financial Markets, with over 1 billion unique users, develops into one of the largest financial services organizations in the world. February 2009. Reacting to new competition, Goldman Sachs becomes the first major investment bank to break itself up. Securities and distribution are sold to eBay Financial Markets, while the remaining activities are split into 2 new companies, Goldman Sachs Advisory Services and Goldman Sachs Capital Management. As a new entrant in financial services, eBay Financial Markets moves quickly and buys a range of leading electronic agency brokerage firms across the globe. February 2010. With the Obama Ensign Act being passed by the US Congress, sport and other outcome trading that had been previously regarded as betting or gambling is legitimized. During the summer, eBay Financial Markets demonstrates their vast financial muscle once again and consolidates the leading outcome trading exchange Betfair into their existing platform. As the year progresses, JP Morgan, Lehman Brothers, BNP Amro and others withdraw one by one from the traditional wholesale intermediation business as their market share is steadily eroded by these new platforms. At year's end, sports trading tops all other hedge fund strategies, and Man Group's Global Football Fund is the first single strategy sports fund with over $10 billion managed. January 2011. eBay and Amazon merge, creating Amazon Bay, a $2 trillion organization surpassing Google Corp, the News Corp and Google merger of 2 years previous, as the world's largest by market capitalization. The newly merged company then acquires Sony Apple Exchange, including the virtual goods of X-Station, the 10th largest virtual economy in the world. May 2012. Giving in to the inevitable, the last significant investment bank throws in the towel on its financial intermediation business. July 2013. Utilizing Amazon Bay's network, the first ad hoc deal-specific banking team, made up of corporate financiers, lawyers, capital market specialists and underwriting agents, advises on and finances the largest ever public-to-private transaction in history, the $200 billion buyout of IBM. April 2014. A sharp sell-off of Google Corp is halted when it announces it had hedged exposure to disastrous World Cup final advertising rates with 3.4 billion euros of payer positions on a basket of favorites described as the largest ever sports trade to date. The hedging strategies are designed by Allianz Sports Risk Solutions and executed using a proprietary algorithm on Amazon Bay's sports trading exchange. March 2015. As part of the most far-reaching financial reforms since the first U.S. banking system was created, the U.S. Treasury announces a switch next year to a new system of debt management known as PALM, Perfect Asset Liability Management. PALM allows investors to create an exact set of cash flows. At the same time, each government program is expected to submit an exact funding requirement with monthly cash flows. Social Security will also project cash flows on an individual basis for each existing and future recipient. Using Amazon Bay's trade matching system, over 8 trillion cash flows will be managed dynamically in real time, offering perfect liquidity in every instrument. The global financial services landscape today, in September 2015, is unrecognizable from that which existed at the turn of the century. Massive advances in technology, software, hardware, and communications infrastructure, coupled with a profound cultural shift as the digital generation, people who have grown up in a connected online world, joined the workforce, has driven unprecedented change and the emergence of an entirely new paradigm. Far from abating, however, these same forces are seen to be continuing and even accelerating. Against this backdrop, it would seem foolish to speculate as to how the landscape will evolve over the next 10 years. However, if anything can be said for certain, it is that the world's financial and information markets in 2025 will continue their explosive growth and will permeate every pore of our social and economic fabric. This narrative has been written by Sean Park, Head of Digital Markets and Credit Flow Products at Dresdner Kleinwort Wasserstein. He is also a Director of Market Group and International Index Company. It is entirely speculative and fictional, and does not represent the opinion of DRKW or any of its affiliates.